Welcome back. Amid the bank turmoil and last week's bearish report from Hindenburg, payment stocks like PayPal, Block, and Affirm are down month to date. But one major crypto VC, Placeholders Chris Berniski, just told us he thinks Block is a name to watch in this space. And my next guest also sees big opportunity for the very same reason that Hindenburg is short, namely the Cash App. Joining me in this edition of Tech Check is research analyst at Morgan Stanley, James Faucette. James, it's great to see you. Welcome.
Thanks a lot. Happy to be here.
So you really think, I mean, you're saying they lean into Cash App, they really build out a bank. Do they have a banking license right now? A bank charter, I guess I should say?
Well, they have an ILC, which gives them the ability to operate in a lot of cases like a bank, but without necessarily all the same restrictions that a traditional bank might have.
Why do you think this is such a big opportunity for Block right now?
Well, if you look at the demographics of the U.S., one of the big opportunities is just the emerging youth group generally. Not only do you have the millennials, but you have Gen Zs just starting to enter into the age where they can have their own banking accounts, et cetera. And one of the things that we've seen is that as banks generally have become more conservative, and we can just see the events of the last few weeks as evidence as to why that is. It makes it harder for them to really go after these younger consumers because they're not really profitable customers yet. But in the case of Cash App, Cash App can take advantage of its position, the P2P as a way to onboard customers very inexpensively, and then eventually mature with them as those consumers age and frankly become more profitable banking customers.
So you say if the right product and strategic investments are made, we think Cash App plus Afterpay can operate like a traditional bank, reaching over the size of the course of 15 years, the size of Capital One today. I think there's people like having panic attacks just hearing about this because you've got cash. We all read the Hindenburg report. Now you're talking about Afterpay. I mean, are these really the right assets to build a durable financial institution?
Yeah, I think so. I mean, look, I think the basics that you start with is a way to acquire customers. Right now, Cash App is using the P2P. They've got some revenue streams. But I think in that report, there were a lot of things that were highlighted. But the thing that stood out to me is none of those were new. And in fact, most everybody that we talked to, whether they were long, short, or indifferent, knew about all the issues that were raised in the report itself. Certainly there are questions on durability of some of the revenue streams, like the debit revenue stream or their instant deposit stream. How is Afterpay going to perform in a credit cycle? But these are like very basic questions around any banking institution. So from our perspective, the ability and opportunity to take advantage of winning the younger consumers and then maturing with them is really what's driving the valuation and the expectation around Cash App generally.
Yeah, I mean, it also, to kind of put it differently, would be if they don't do this, they'll miss a big opportunity because those customers are probably going to end up maturing into somebody else's market. I wonder, though, if this is also a customer base that would be incredibly flighty, right? This is inherently mobile app technology. And as we were all just talking about whether it was $40 billion or $100 billion worth of cash that was out the door at SVB, would there be some concern with, just keeping people on this app? It's trendy. People might move on. There might be a new payment technology that might raise their cost, of funds over time and make it less profitable than it is today. I'm just curious what you would think about that.
Yeah, I mean, I think that's always a question. I would point to a couple of things. Is that in our proprietary AlphaWise survey, Morgan Stanley AlphaWise survey, is what we find is that already about 3/4 of existing Cash App customers want Cash App to do more things, deliver more value, new products, and more traditional banking services. Is there a flight risk? Yeah, I guess so. But that's the trick with any business is how do you retain your customers? And I don't think that the formula to do so is magic. You have to do it, reasonable cost, good service, make sure that the customers are seeing value. And sure, if you're able to do that, the retention will be fine.
Real quickly, what about Venmo? Where does that leave them? Wouldn't they arguably, could you make the same kind of case for building out more of a bank there?
Yeah, so Venmo's interesting. Certainly, it has a lot of parallels. From our perspective, I think that Venmo, though, its real long-term opportunity is to turn into more of a checkout button a la PayPal. And frankly, I think that's probably a better business being a digital wallet or a checkout button, if you will, in the future than being a bank. But certainly Venmo has a pole position to be able to take advantage of the opportunity that's presented to them. In the future, I actually don't see a lot of direct competition, even if there is today.
Very interesting. James, thanks for your time today. We appreciate it.
Thank you.
James Faucette with Morgan Stanley.